Welcome back. Joining us on the show now is Feroze Azeez. He's Deputy CEO, Anand Rathi Wealth. Feroze, hi, good to have you. And I remember the last conversation I had with you on gold, and you said gold is at the lowest form at the pyramid. With what gold is done right now, are you changing positions at all? And are you willing to put in some more in case of gold?
Yes, Manisha, see, I think, like you rightly said, from an investment standpoint, India doesn't need too much gold investment because we are, if you look at the 370 lakh crores of physical assets, gold has taken a substantive portion of Indian households. So we are over-invested for sure. Unlike other households in other countries, gold is not a integral part of their usage or even an investment standpoint. So point two I would like to make is, of course, gold is at its peak. Because there is a shift in several central banks, the kind of collection of gold by central banks is the highest in 22, 23, highest ever since 1967. Central banks have not collected gold at this pace, unlike just these 2 years where they've collected. So I think there has been a lot of demand. So I think gold should have part of one's portfolio if it's already not there. But most HNIs I meet they have substantive portion of gold already. But yeah, sovereign gold bond giving that 4-5% extra post-tax is a huge kicker and a motivation to buy gold, especially in digital form, in the form of sovereign gold bonds.
So, Feroze, when we talk about India, yes, we are perhaps long gold, but in a jewelry form. When it comes to financialization of gold, would you say that there are enough products now available? And do you think India is moving in that direction?
Yes, I think there is a huge paradigm shift in terms of people's thought process. I think both the genders now seem to be liking the digital form of gold as well, unlike in the past. So there has been a huge shift. Of course, it's not got the kind of momentum it should get, point one. Point two, if you look at from a short-term standpoint, if you're buying gold for 1-2 years and 3 years or even lesser, ETF, a gold ETF or a gold fund is a great alternative. If you're looking at a long-term strategic allocation to a portfolio, then sovereign gold bond definitely does the trick. But coming back to your pointed question, I think there is a lot to be desired, but the paradigm shift and the green shoots of that is very, very evident when I interact with several HNIs and even ultra HNI clients.
Feroze, what are you advising clients now on what part of portfolio should be gold? And are you at all introducing silver within?
No, I'm not going to silver as yet because I think getting gold in and sovereign gold bonds are definitely a very, very good motivation to have in one's portfolio. So I would say that it's a great debt replacer for sure. If you don't like the return of debt, especially the taxation of debt, after the introduction of Section 50AA, last budget, taxation on debt has become very detrimental. So gold could be as much as 10% of one's portfolio, or at least half the portion of your debt can definitely get into gold.
What is kind of interest that India has shown? I mean, we've seen a huge run-up in gold. Would you say that a lot of Indians perhaps made use of this as an investment? Are there new folios that are getting in? Do you see more interest at these levels also?
Yes, I think at these levels also I'm seeing interest because quite a few people have this huge desire of late of accumulating some degree of hedge to rupee because rupee has not depreciated as much for the last few years. Because of the interest rate differential, which is called interest rate parity between US and India, has shrunk dramatically. So a point I'm trying to make is I think HNI is liking gold also for the fact that it acts as a currency hedge. And I think there is a desire to have foreign currency immensely over the last post-COVID, definitely that is propelled. I would say that at these levels also, people are accumulating gold, and I don't think this time around gold has been supported by huge rupee depreciation, which used to be the case for long periods of time.
Oh, absolutely. Feroze, also, I mean, we are in a time, and let's talk about India. We love buying our jewelry. We love going long on equities. Do you see all of that play on for a too longer time? I mean, as you said, almost every asset class seems to be running up right now. How are you looking at a division or a reforming of a portfolio, even if for the near term?
Yes, I think the way China is accumulating gold, I'm very, very thrilled because their dollar reserves from 2011 have come down by one third. So I think I'm bullish on dollar gold now because it was stuck in that range. Now I think it's broken out of the trend. So I would allocate at least 10 to 15% in gold, only sovereign gold bonds, if you have debt in your portfolio. If you've used other growth assets like equity, and I think that is also done justice, like you said, Manisha, that all assets have run up. I think I'm very happy with the gold breaking the dollar range significantly and decisively.
All right. Feroze, from all the conversations that I've had with you in the past, this is the most bullish that I've seen you in gold. And why not? Because we're trading at all-time highs now. And everybody has an opinion, by the way, in gold. Do you have one on where it's headed?
So I don't have an opinion. I'm looking at it delivering the 3-year long-term average has been 9.3% compounded is the rolling average of gold for this century. And I think it will give you that kind of double-digit return if held in the form of sovereign gold bond, because this 4% I think is underspoken, because you get capital gain tax at zero. And if you get 2.5% taxable interest, you're getting 4-5% compounded more in 8 years. So I think even if gold delivered 6, sovereign gold bond on a post-tax equivalent basis is delivering me 10. So it's a great debt replacement. So I've been saying that from day one, ever since sovereign gold bond was introduced 8 years back. So that's my huge motivation.
I hear that. Feroze, thank you as always for joining in and talking about gold this time, where the expectation is that 10% of your portfolio should at least be in gold, or half of your debt replacer can be happening in case of gold, and a double-digit percentage gains is what we can expect. And of course, the sovereign gold bond as the best bet when you are investing in paper gold there. But with that, that's all the time that we have on Halftime Report. Stay tuned for Business Lunch. That will take all the action forward.